Hi everybody and welcome to your TorFX weekly market update for the week of the 16th of May 2016. I'm Nathan Bray. I'll be your host this week. We're going to put the spotlight on the euro against the US dollar. We're going to take a look at all the major news events coming out this week and of course what to expect for the week ahead. But first of all, let's take a look at this term currency wars. Let's break it down and find out exactly what it means and the effect that it's having on the market.
Well, there's a lot of talk in the market about currency wars kicking back into gear. And you can see that Japan looks like they're ready to intensify it. And then you've got the US stepping in, looking to turn up the heat. And of course, Australia recently, with their recent reduction in interest rates down to record lows, is also getting in on the game. So I thought we'd take a moment and say, well, what exactly is meant by currency wars? What exactly does it mean? Well, first of all, like any war, it all depends on getting the right conditions. So there's three things you kind of look for. First of all, you're looking for high world debt. And you can certainly see here on the world debt clock, we're looking at well over 60 trillion in debt, and that's with a T. And then, of course, what you're looking for is stubbornly low inflation, so we can check that off. And the third and final thing is you're looking for low growth, which makes it very difficult to try and pay back the debt or having inflation cancel debt out. So basically what central banks then do is, or individual countries, what they do is try and steal demand or steal growth or inflation from other countries by basically devaluing their currency. So in effect, it's a race to the bottom. What it's like a financial Miss Universe competition where the ugliest and the meanest contestant is the winner. One of the unintended effects, of course, of currency wars, which we're starting to see in the market at the moment, especially with the US dollar against the yen, is that it leaves the markets at a juncture where technical price action actually starts to drive the fundamental narrative rather than the other way around. Effectively, the market starts to say to the central banks, listen, you just don't look that bad in that dress. As we take a look at the news coming out this week, you'll find there's a lot of inflation and unemployment and employment data coming out around the world. As we move into Tuesday, we've got the monetary policy meeting minutes coming out on the Australian currency. We've also got inflation expectations from New Zealand, CPI out of the pound sterling, and then most importantly, in the evening here, as New York opens, we've got a whole swath of data coming out on the US currency with manufacturing sales, building permits, CPI, their core CPI, of course, without the food and the energy included. They've got housing starts and industrial production. So Tuesday evening should be very interesting indeed to see how the inflation targets are ticking along. And then as we move into Wednesday, New Zealand's got their PPI input and output. You've got average earnings and the claimant count coming out from the pound sterling. As we move into Thursday, we've got FOMC meeting minutes coming out on the US currency. And of course, interesting here will be the employment change and the unemployment rate out on Australia. So you'll see there we've got a big reduction in the number of jobs we're creating is the prediction, and of course an uptick in our unemployment rate, which will go nicely as far as the Reserve Bank's policy to get the dollar down and join into this currency war that we're in at the moment. Then we've got pound retail sales coming out, looking for a slight improvement, but still sort of hovering around that 0% there. Then Philly Fed Manufacturing Index and unemployment claims looking to still be staying up above that 270,000. To finish off, let's take a look at the euro against the US dollar. Last week we talked about a high probability failure up here around this 1.1471 level, and we certainly did see that. So it's a question of this week, is it going to go back up and retest? If it fails again, that could create some fantastic trading opportunities down to the bottom of the range.
Well, that's all from me. I look forward to speaking to you all next week. This is Nathan Bray for TorFX.